Hi, Greg Dorsey here. It's a Thursday, September 1st at Leeb.com, Leeb.com. Hey, be sure to sign up for our free newsletter if you haven't done so already at Leeb.com. Well, stocks took a breather today with the blue chips, S&P 500 slipping about a little more than 1%. Small caps gave off mixed signals. The Russell 2000 index, probably the best-known small cap index, dropped about 2.5%. But the more useful index of the unweighted average of all stocks traded on the New York Stock Exchange dropped about 1.2%, roughly in line with the blue chips. Volume was once again light at a little more than 1 billion shares trading hands on the NYSE, but that's not too surprising given that we're heading into the final weekend of summer and people still, not everybody's gotten back from the power outages caused by the hurricane that blew through the Northeast last week. Now, commodities were mostly in the red today as well, with the exception of crude oil, which got a lift courtesy of Hurricane Katia, which is tracking towards the Gulf of Mexico and the assets, the oil-producing assets there. The standout performers in the financial markets today were bonds, with the 30-year Treasury rallying more than 2 full points to close the yield of 3.51%. The 10-year Treasury closed with a yield of a little less than 2.15%. Bond traders are betting on a weak non-farm payrolls print with tomorrow's unemployment report. The consensus is expecting about 105,000 jobs were created last month, which is still quite weak and not enough to bring down the unemployment rate. A disappointing jobs report will be one more reason for the Federal Reserve to take additional steps to inject liquidity into the system, and it meets again in a couple of weeks to decide what to do with policy. Additional liquidity would be good for stocks, but it'd be even better for precious metals, which, as you know, if you've been watching these for any length of time, we've been pounding the table for. So stay tuned. Tomorrow should be an interesting day.